Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, March 13th, 2013. Well, a change of trend today to the downside, and a candle has made a lower high and a lower low. A very large black body candle denoting the sellers making a substantial amount of net bearish progress on the day between the open and the close. And that's in line with some of these black body candles that we've seen in the recent past, and it does suggest some solid bearishness coming back into this market. For the previous day's trading, the market attempted to rally and changed trend to on a spinning top type candle, an indecisive candle, and it's little wonder that today we've seen this bearish candle. We have had the sellers close with control. They have closed down between the midpoint level and not quite down towards the low, so it suggests that the control is not as strong as we'd like to see for continuation of the trend to the downside, but it is still a decent amount of control. The important thing here is the shadow on the bottom of this candle, and we've seen the sellers lose some commitment down below the support level at 129.68, and the market did manage to close just down below there, but within a zone the market hasn't. It hasn't been a substantial close below, and this does raise some doubt about the market's ability to finally trade down below their close battle down below the 129.68 level and trade lower down to the 128.57 area. But certainly the size of this black body and the momentum throughout the trading day in a net effect does suggest that there is a possibility of the market trading down to there. Now, in terms of the previous pattern that we had here in the market, the flag pattern, we do have a target substantially lower than where the market's trading. So if we do see the market break out back down to the downside, that target may come into play, but it's a fairly small pattern now in the scheme of things, and this in very volatile trading that we're seeing the market trading in at the moment doesn't really suggest that the market will be trading down to that target and meet that target. If we look at how this pattern, and this is some sort of a congestion area and a type of megaphone pattern, as I've mentioned previously, that we've looked at before, and we tend to see them at tops in markets. It's not that common to see at a market bottom. They tend to have 5 points, but they're very difficult to trade because you don't actually know when we'll have the final point. We could see a breakout to the downside here or a breakout to the upside. I think the main reason why this could be a bottom is because of the volatility at the end of this very substantial downtrend. Very efficient downtrending market in the second time frame prior to this congestion, and then volatility coming into the market. Volatility at the end of an uptrend or a downtrend does suggest that there is a potential reversal. So we do need to watch an area above where the market's trading, but as you can see with this pattern, where is the breakout going to be confirmed? Is it at 130.79? Will it be higher at 131.45? Or will the market establish another higher point at 131.96 and then trade down through these areas to form another lower low after a higher high in this volatile congestion area? So very, very difficult to judge these. The thing that we do know is that we do have well established resistance at 130.79 and then at 131.45. So if we do see a breakout to the upside, the market will need to find some very solid upside momentum and some strength from the buyers. If we do have that upside breakout as well, then we do have solid resistance above those areas as well, 131.96, and then the area around the cloud, which extends up to about the 133 level, so very, very solid resistance. Now to the downside, if we see the breakout to the downside, obviously at the moment 129.68 is important and extending in a zone down to 129, and then below there 128.57 and a very large zone of support at 127. But I think if we do see a solid bearish breakout down below this area, we could see the market quickly trading down to the 128.57 level and beyond. Now moving to the Fibonacci extension, and we're examining the new first time frame downtrend to the previous time the market was trending down, and here with this candle we've seen the market interact with the 161.8% level, testing down below there and failing to close down below that, so that does suggest that there is a possibility of a change of trend to the upside. But certainly looking at this candle, we have a fairly large black body candle, a candle where the sellers are in control, and we're not seeing any weakness in the market from the point of view of the sellers. The buyers really haven't got any strength at the moment in this market, and it does suggest that there is a possibility of the market trading down to the 261.8%, which is at 128.48. Now in terms of the Fibonacci retracement, and we're looking at the retracement of this prior uptrend that the market was in, and now the change of trend, and here we've seen the market test to the 100% level, 129.64, and just barely close beyond there, so that is suggesting that there is a possibility of a test down to the 161.8%. We're not seeing any buying coming in, so a possibility of the market trading down to 128.59, giving us a target down there. Now in terms of Ichimoku, obviously a bearish market in all three time frames. The market is trading below the clouds, so bearish in the long term time frame, trading below the Kijun-sen, bearish in the medium term time frame, and trading below the Tenkan-sen, the green line, so bearish in the fast term time frame. And the Chikou span is below the corresponding price action, so that's confirming the bearishness that we're seeing in the market. And all of this does suggest that it's likely that the breakout will be to the downside, so we want confirmation of that. We want to see a bearish close down below this zone, extending roughly down to 129.20, and as I've mentioned, there is potential for the market test down to 128.57 and beyond, even down to 127.44. Looking at the Tenkan-sen here, that has been pointing down quite sharply at times, reflecting the solid downside momentum that we're seeing in this market, and also the Kijun-sen is pointing down sharply, reflecting the efficient second time frame downtrend that we had this market in prior to this volatile area. And the Tenkan-sen is acting as the first level of resistance for this market. For the previous 3 trading days we've seen that area act as resistance, and it does mean that the 130.25 level is very important resistance to this market for today's trading. If we see the market rally to there and sell off, then there's probably a good possibility that we could be trading lower, so that is a solid barrier to this market moving higher. But then, as I've already mentioned, very solid resistance at 130.79 and above.